Hey guys, let's see who we have. It's 1:30. We're gonna get started in a couple of minutes. Sorry about my attire. I still have yet to take a shower, so it's. I'm just gonna. I feel like I do like a million Zoom calls. Kind of messy. I'm gonna pull up my chat box. I did this call. I think I did this call sort of. I meant to do it as a meeting and not a webinar. So I think a webinar. I'm not too tech savvy. I think a webinar I can't show other people and I can't have other people have the mic. So I probably should have done it the other way. But that's okay. We're going to use the chat box if anybody has questions as we go or that sort of thing. Yo, Matthew, what's up, Matthew? So hit me up in the chat box. Let me know who's hopping in. So I think that we had a bunch of people register. David, what's up? Daryl's here, Mateen is here, Sean is here, So Kim is here. Let's see, Varda's here. There's a few people. Oh, maybe we do have, maybe I can, as we go, allow to talk. I guess I can do that. I need to get more tech savvy, especially as time goes on. David Tang, I think we rode in the helicopter together in Cannes. Oh my gosh. Yeah. That was a good trip. Cannes, France, and Monaco. That was like an amazing trip. Daryl from Canada, with the accent. Nice to see you guys. Awesome. Okay, so let's get started, and people will probably pop in, and I'm probably going to put this recording somewhere also. But I am super excited because first of all, like those of you guys that know me, like know that I am uber excited about options. And people that are not trading options, like you are just missing the fucking boat. I'll just leave it like that. Especially if you're trading stock. Like if you're trading stock and you're not trading options, you are missing the boat. So options are amazing. I started trading options way back a long time ago in 1997. Since then, I've made thousands of trades, commodity futures and options, stock futures and options. I've traded Bitcoin options, options all over the place. And I've, learned a lot, made a lot of mistakes, done a lot of really cool things right. And I just want to share my stuff with people. And recently Coinbase, went public, right? So those of you who are in the crypto space, crypto is kind of like a hype thing, right? Matthew, yeah. Matthew says, but you also made a lot of money. Yes, I have made a lot of money over the years, and I've lost a lot of money over the years, and I've learned oodles and oodles of things. And I'm just passionate about helping people, with stuff that I know is like amazing and that everybody should do. So and that's what options are. So hence this class, not class, webinar, an hour webinar. But I do have other classes and I have all kinds of videos that I do on this kind of thing. But going back to Coinbase and crypto in general, crypto is like hyped, right? So who raise your hand? Who's trading crypto right now? Who's in the crypto space? Who has some Bitcoin? Maybe some Ether? Maybe Dodge. That's like the new coin, right? That's up like 1,000,000% in the past week or something like that. So I started trading crypto in 2017. So most of you guys on the call, maybe not everybody, but lots of people are from the Tony environment, Platts. So I started when I went to a relationship trip back in 2017. I didn't even know what Bitcoin was, right? I didn't know what cryptocurrency was. I had no idea. And I learned about it there. And I think I started buying Bitcoin. I think it was like $9,000 a coin, right? And what is it now? I think Bitcoin is like, I think 52 BTC price. I'm gonna look it up. 52. I think it was 60 recently though. Actually, maybe even higher than 60. 63. It was 63 9 days ago, and now it's 52.2. So it's got a lot of volatility. And I believe in crypto long term. One of the downfalls in my view, and you guys tell me, if you agree, disagree, or what. But one of the downfalls with cryptocurrency is it's kind of a pain in the ass, right? So number one, there's lots of different exchanges, right? So there's Coinbase, and there's LedgerX, and there's Kraken, and there's, I don't know, just lots of different ones, right? They all work a little bit differently. Binance, yeah, there's tons of Bitfinex. I mean, I think I could just go on and on. So there's lots of different exchanges. They all work a little bit differently. You have like these crazy pass codes in that you have. It's very important that you don't mess up your passcodes, passwords, those kinds of things. There's been a couple people in our community, actually. I'm not going to name names, but I know a close friend of mine recently, I forget what the number is. I think it was like 50K, 60K. I don't remember exactly, something like that. Something happened with his password and he got locked out of his account. And I haven't talked to him recently, but I think he's burnt out of those coins. Like if you lose your password, you know, it's kind of like as if you had a suitcase full of cash and you left it at the train station and then you went somewhere else. Basically you lose it, right? If I'm not mistaken, correct me if I'm wrong, hit me up in the chat box. I want to keep everything like super fucking interactive in this. So I can open, like when we do Q&A at the end, I'm going to open your mic if you have questions. But for right now, hit me up in the chat box or raise your hand and that kind of thing. If you have questions or you know, points to what I'm talking about. So going back to crypto, it's challenging to trade, right? There's lots of different exchanges. There's not a lot of regulation. Actually, there's not much regulation at all yet. I mean, obviously, it's probably going to change as time goes on. And so my experience has been that I had been trading a lot of crypto, and then I sort of shifted. And you have the ability now, especially, and that's what this call is about. You have the ability to trade like old school stocks and options and still participate in the crypto market, right? And what I'm talking about is like, you can do it with Coinbase. You can do it with other crypto companies, like Riot is another crypto company now. Now I do want to like start this call by saying this call is like for information, right? So don't be taking any like, oh my gosh, Michelle told me to buy this and then you go buy that and then it's my fault or something like that. I just want to share my information with you, and ultimately it's your money. You decide what you want to do, right? But going back to how to invest, you have the ability of participating in really big, you know, swings, right? Like upswings in the crypto market, but not in crypto, like not buying Bitcoin on Coinbase, but you could still participate in it. And that's what this call is about. I'm going to show you. So I'm going to go ahead and share my screen, right? Let me just set up my, let's see, trading platform here. Okay. Share screen, share screen, share screen. I think you guys can all see my screen. So this is just, I'm going to keep my chat box up too, so you guys can put some notes as we go. But basically, this is just like a paper trading platform, right? So don't be confused by any of this stuff. This call is mostly about Coinbase, but we could talk about some other crypto stuff as well. I'm going to pull up Coinbase, right? So Coinbase just went public recently. I'm going to pull up a chart for Coinbase. I think it was like 5 days ago or something like that. A lot of you guys are probably familiar with them. They are very big in like the everyday regular marketplace for regular people buying Bitcoin, right? And this right here is E-Trade. So it's just a paper trading account, but this is kind of like, okay, well, what has Coinbase done? You know, it opened here at like 381 or something. It went as high as, I don't know, 430, and it went as low as 310 the day that it opened on the New York Stock Exchange trading. And then here's 1 day, 2 days, 3 days, 4, 5, 6, 7. So it's been trading 7 days today. It closed at 290 and some change per share. Now you could do a couple things. You can buy, who trades options here? Anybody on the call trade options or want to trade options, thought about trading options, wanted to learn about trading options? The advantage, let me know in the chat box. Okay, so Kim, Lenny, a couple people, right? So have in the past. Okay, Paul, let's see, Sage. Oh, we had a bunch of people more. I want to learn, new to it, and I want to learn. Awesome. Here's the fucking bomb thing about options. Options are the right, but not the obligation, but the right to buy or sell a specific stock at a specific price before a specific time, right? That's what options are. So it's like the right to buy or sell something at a certain price before a certain time. Now, the advantage of options, a couple things. So sometimes people will say, oh my gosh, I heard about options and they're super risky and you can lose a lot of money. Yeah, you can. I mean, you can lose a lot of money in lots of different things, right? So it depends on how you're trading something. But options give you the ability to do a couple things. You can buy an option. So I'm going to talk some basics, and I'm going to get to your questions too. I got a bunch of questions and comments in the chat box. And if we don't finish like today, I'm gonna host a couple of these calls. Perhaps if there's interest, like I just want to share my excitement about this kind of thing because I think it's so amazing. So let me go through options basically. Options are like, let's say, puts and calls, right? So you can, this is going to be like a crash course fucking 1 hour thing on options. So hopefully I don't lose any of you guys. And again, if I do, I'm going to set up a series of these to kind of go through it. But basically, you can, let's say you think Coinbase is going to go up. I'm just saying as an example. Now you can buy Coinbase, right? So right now it's $293 per share. I'll just say, right? Because right now the US market is closed, but other markets are trading. So you see that the numbers changing on my screen, right? Because other countries are trading when the US closes. So you could buy Coinbase at, let's say, $290 a share. And how do you make money? Well, you make money if the price goes up, right? But here's the thing that a lot of people need to fucking recognize and realize when it comes to stock trading. And one of the big differences between stocks and options. When you buy a stock and it goes up in price, you make money, but it's paper money. It's like an unrealized gain, right? So let's say I buy 100 shares of Coinbase and I pay $290. And let's say that fucker goes up to 500 in 3 days, right? Can you spend that money? No, you can't spend it. You look at a gain on your computer screen, or you look at a gain on your statement that you get every quarter in the mail. And yeah, you made money, but it's not spendable money. It's not constructive income. It's not realized gain, right? It's a paper gain. When does it turn into a realized gain? When you sell your stock. I'm going to say that again. And some of you might be, and tell me if this is, oh my gosh, Michelle, I already know that. What are you talking about? Get on with some more stuff. Tell me if you already know this stuff, if it's basic, or, oh my gosh, I never really thought about it that way. And hopefully I'm not talking too fast. And let me know that too. But basically, let's say you buy 100 shares of Coinbase at $290 a share, it goes up to 500. Okay, you made money, but it's a paper profit and you can't actually spend it until you sell your shares. When you trade options, when you sell options, I always talk about selling options. I'm going to talk about in a moment what the difference between buying and selling is. But when you sell options, you actually get like income in your fucking pocket. Let me give you an example. And I'm gonna talk in like lots of different places, but really, here's the thing about trading options. Sometimes people will say, oh my gosh, that's way too confusing. Puts, calls, strike prices, expiration date, delta, blah, blah, blah. That's too much shit, Michelle. No, it's not too much shit. Let me tell you something. It's kind of like learning how to drive stick shift. Who drives stick shift here, right? Like standard shift car. So like I drive automatic, but like when I was in my early 20s, started making some money and I wanted to buy a hot sports car and I wanted this stick shift car. And I was like, fuck, okay, I have to like shift with my right hand. I have to use my left foot. I have to use my right foot. And it was confusing, right? So it's like all these different things. And let's say if you're parked on a hill, you have to make sure you don't back up. My point is, what does it take? It takes a little bit of practice. That's what options are. Options, you just take a little bit of practice. So it's kind of like confusing at the beginning, but it's so fucking easy. Once it clicks, it's so easy. Let me give you an example. We're going to talk about Coinbase. Coinbase right now is $290 a share. Let me ask you guys, who on this call would be interested in buying Coinbase but not paying $290? Who would want to buy Coinbase at $250 per share? Yeah, fucking lots of hands go up. Me. Absolutely. Did you know that you have the ability to buy Coinbase at $250 a share and get paid to commit to buy Coinbase at $250 a share? I'm going to say that again. I'm going to back up. I'm going to say it more clearly. Did you know that you have the ability to get paid? Somebody else is going to pay you cash in your pocket. You get to keep it. You get to spend it. You get to take your fucking wife out to dinner. You get to go to the mall and buy a new pair of sneakers, whatever. You get cash in your pocket in order to commit to buy Coinbase if it goes down to 250. If it doesn't go down to 250, you don't buy it. But either way, you keep that cash. Who would be interested in a fucking deal like that? Does that make sense? Tell me in the chat box if that makes sense. If it doesn't make sense, are you confused? You get paid money, right? Makes sense. So a couple people, and if it doesn't make sense, please be honest with me. Because I want everybody to like leave this call and say, man, Michelle's fucking smart. And I didn't know you could do that. And I'm going to go look into that some more. And maybe something like this can change your life. Because here's the thing, what options give you. Options give you the fucking ability to like create yourself your own income, like who doesn't like passive income? Everybody likes passive income, right? It gives yourself an ability to create passive income without having to like show up for work, not trading your time for money. You get to like today is what, Thursday, Sunday, I'm going to go to my place in the Virgin Islands. I live in California, but I have a place in the Virgin Islands, and I just bring my laptop. I have a Wi-Fi connection there. Matthew on this call has been to my place in the VI, right, Matthew? I bring my laptop, I have a Wi-Fi connection, and I can trade and I can make money. I don't have to like show up somewhere or do something. I could just do it like on my fucking couch in my slippers, like not having taken a shower yet, as an example, right? Yes, David, you can rent my place. It's like an Airbnb kind of place, but we can talk about that after. So here's the thing, like options give you that ability. So let me give you an example. I'm going to walk through some things, and please, I encourage you, like tell me in the chat box if you have questions as we go, right? So Coinbase is $2.90 a share right now. This is going to be a fucking crash course. Coinbase is $2.90 a share. Now don't get confused with all this shit on the screen. It's really not that hard once you get the hang of it, but I'm just going to look it up because I want to see what's going on. Okay. Today is April 22nd, right? So all options have like expiration dates, right? It's kind of like car insurance. Let me give you an example. I drive a car and I buy car insurance. And the purpose of that, to have like collision insurance, is that if I smash my car, I don't want to pay to fix it. I want somebody else to pay to fix it. I want to shift the risk from myself over to someone else, right? So what do? I pay car insurance, like the premium, right? You call it a premium. They tell me how much premium I pay. I pay them that, and then it's for some certain specific term. Let's say 6 months. I have a 6-month policy, right? So I pay them like, let's say $1,000 for 6 months. If I smash my car, they fix it. I don't lose all my money. I don't lose money on a smashed car. They fix it. What happens at the end of 6 months if I don't smash my car? Did they give me any of my premium back that I paid? What do you guys think? Do you get any of your fucking money back? No, absolutely not. It's like a rhetorical question, right? Of course not. So I'm buying insurance. I'm paying a premium. That insurance has a specific term, right? It expires in 6 months. If I smash my car within 6 months, they're going to pay to fix it. If I don't smash my car, obviously there's nothing to fix. They keep the premium. So I'm shifting the risk over to the insurance company. When you sell a put, it's the same thing, right? So it sounds kind of confusing, but it's not. So let's go back to Coinbase. Coinbase is what? $2.90 a share, I think I said, right? Let's see. Is that what I said? $2.90. Yes, Coinbase is $2.90 a share right now. If you want to become like an insurance company and take in other people's premium, you want to take cash in your pocket. I'm going to show you how to do it right now in the next 5 minutes. You get to choose the expiration date. So most of the time, especially when you're new, I always recommend, and again, recommend is kind of a tricky word, right? So don't take any of this as investment recommendations. I'm just educating you, and you do whatever you want to do. It's your money, right? But I want to educate you. But I always say short term is the best. Why is short term the best? I don't know what the fucking market is going to do next week, next month, 2 months from now. The smartest people on the planet don't know what the market's going to do. So there's a lot of plats on this page. I wasn't at finance a couple of weeks ago, but I have been to finance a few other times previously. And one of the things that I always take away from like a finance trip is the smartest people on the planet don't know what's going to happen with the stock market, right? And if they did know, they would not be talking to you. And you bet your ass that's correct. So I don't have a crystal ball. I don't know what's going to happen tomorrow. Anybody that tells you that they do, they're full of shit, right? So if I don't know what's going to happen tomorrow, what do I want to do? I want to try to make money, whether the market goes up or down or stays sideways. That's what fucking options do. So let's go back to the expiration date. I get to choose when that option expires. How long do I want to sell an insurance company to Jane Smith over in Idaho for, as an example, right? I like short-term stuff. Options have a lot of Friday expiration dates. So today's Thursday, right? So today's April 22nd. Some of you guys are in other countries. So I'm in LA. Right now in LA, it's April 22nd, Thursday at 1:51 p.m. in the afternoon, right? So I'm going to look at an option that expires next Friday. So 8 days. You guys see on my screen, April 30th, 8 days. So I'm going to say, okay, Coinbase is $2.90 a share, right? I don't have any crypto. I'm just giving you guys some examples. I don't have any crypto, but I'd be kind of cool with buying Coinbase, but I don't want to pay $2.90 a share. I want to pay $2.50. I get to choose, right? When you sell options, you're in the fucking driver's seat. You get to choose the time frame, you get to choose the stock that you want to buy, and you get to choose the price at which you want to buy it at, right? Follow me. So I'm going to say, okay, between now and next Friday, 8 days away, I'm going to sell a $250 Coinbase put, right? So we see 250 right here. It looks confusing. It just takes a little bit of practice. It closed today at 1.7. What does that mean? Options always trade in multiples of 100, right? So anytime you trade one option, it's 100 shares. So 1.7, I don't need a calculator, but I'm going to show you anyway. 1.7 times 100 is $170. What this means is you can sell a Coinbase put that expires next Friday, April 30th, with a $250 strike price. I know it sounds confusing, but all that means is $170 gets deposited into your brokerage account. So your brokerage account goes up by $170, right? Between now and next Friday, if Coinbase drops from where it's trading now, it's trading 290, right? So if it drops from 290 to 250, it's got to go down 40 bucks. Now, 40 bucks, I'm not a math whiz, but it's like 15% because it's like 290 right now, right? So it's like 15%. Correct me if I'm wrong in the chat box. I think that's what it is, approximately, in the next 8 days. If it drops to 250 or lower, I'm going to be ready to buy 100 shares at 250. But guess what? I'm picking that number ahead of time. I'd be kind of cool with buying Coinbase at 250. Right now it's 290, right? Coinbase hype, Bitcoin hype. I want to get on the fucking train, right? So I can buy Coinbase. I will buy Coinbase if it drops to 250 or lower, and I'm going to pay $250 per share. For that commitment, I'm paid $170. $170 gets deposited in my brokerage account. Now that's a premium, right? I'm the insurance company now, right? Quote unquote insurance company. I keep that premium no matter what happens to the price. Let's say Coinbase is at 290 today, so it went down a lot, I think, today. Let's say it goes up tomorrow, and it goes up the next day, and it goes up the next day, and it goes to, I don't know, whatever, 300, 310, whatever. As long as that number stays over 250 per share next Friday, I don't buy Coinbase. I only want to buy it if it's on sale. I don't want to buy shit when retail price. I want to buy things when it's cheap, when it's on sale, right? So if Coinbase closes next Friday over 250 bucks, I'm not going to buy the shares, but I keep $170 because that's the premium that I got when I made that commitment, when I entered into that contract. You guys follow me? That's kind of like, that's like the 30,000 foot level on sort of how to sell a put, right? Where did the 170 come from? Somebody else paid for it. So here, that's a good question. So let me answer that. It's kind of like insurance, right? So me buying car insurance, right? I'm in California. I buy car insurance from Mercury, right? I pay them $1,000. I think I pay a lot more, but I'm just using round numbers. I pay them $1,000 for 6 months. If I smash my car in 6 months, they're going to pay to fix my car. The reason I'm buying insurance from them is because I don't want to lose all my money if I crash my car, right? Options are the same. So somebody else, let's say, owns Coinbase. I'm just saying as an example. Different people trade for different reasons, but I'm going to give you an example. Jane Smith over here owns Coinbase. but she doesn't want to lose all her money if the stock crashes, right? So she buys insurance on the stock. I sell her the insurance on the stock. So if her stock crashes, right, to 250 or lower, I'm going to buy her stock from her for $250. If it doesn't crash, I don't buy it. She keeps her shares. I don't buy any shares. And I keep her 170 bucks that she paid me because that's what she paid me for the insurance, right? That's kind of how that works. Does that answer your question? So one of two things will happen between now and Friday, right? Coinbase is going to be more expensive than 250 or less expensive. It's going to be higher than 250 or lower than 250, right? If it's higher than 250, you don't buy the shares. If it's lower than 250, you buy them at that price. But either way, you keep the 170 bucks. You follow me? So when you sell a put, it's kind of like you get the ability to get paid money, free money. You keep the money no matter what happens. You keep the money, and you're committing to buy a stock that you like anyway at a price that you want to buy it at anyway. Everybody should, like, if you think about it that way, anybody who trades stock should be trading options without question, in my opinion, without question. The only reason why you're not trading options is because you don't understand them, if that's the case. If you're trading stocks and you don't trade options, the only reason is because you don't understand it. Because nowhere in the fucking universe, if I want to buy Coinbase as an example, okay, I don't have any stock, let's say, and I want to go buy some Coinbase stock, or, you know, they just went public 6-7 days ago or something, and I want to go buy some Coinbase stock. Why would I go pay retail price, $290, if I can choose how much I'm going to pay for it? I don't want to pay $290. I want to pay $250. I picked that number. Look at all these numbers here. Let's say I want to pay $200, right? Okay, I'm going to sell a $200 put. I'm going to get paid 20 bucks. It's not a lot of money, 20 bucks. 20 bucks is nothing, right? But it's fucking $20 in your pocket. And what does that mean? That means between now and next Friday, if Coinbase drops to 200, I'm going to buy 100 shares at 200. If it doesn't go down, I don't buy it. But either way, I keep the $20. So I'm paid money to commit to buy a stock that I like anyway at a fucking price that I choose, that I want to buy it at. That's what it means. Okay, so I have a couple questions. I'm going to say, let's see. Does that mean if it goes down, you have to pay 250 times 100? So in answer to your question, yes. So I know you guys probably don't see the question, so I'm going to be super specific, and I'm going to like make sure I don't lose anybody. If I'm selling a $250 put and it drops to 250, let's say it drops to, so here's the risk, people, and I'm going to answer your question. I'm going to add a little more value to it. Here's the risk, right? It's easy to make money. It's harder to not lose money. So it's always like super important to think about, well, what's my worst case scenario? What's my maximum exposure? Where's my fucking risk, right? That's what we want to think about. So here's my risk. If I sell a $250 put on Coinbase and it drops to 200, let's say the fucking bottom falls out and Bitcoin like drops to 200. Guess what? I'm buying it at 250. So you do have a little risk. There's no fucking free lunch, people. There's no risk-free stuff. If there's like, not in the stock market anyway, there's always going to be risk. But the trick of it is to recognize or figure out what risk there is, and then make trades relative to the risk that you want to take, right? So here's how I say to that, right? Let's say, first of all, we always look at statistics. Now, you don't have to be, I always say, like, I say the word statistics and some people are like, fuck, Michelle, I sucked in school. What are you talking about? I can't do that. I'm not good at math. No, that's not correct. Just because I say the word statistics doesn't mean you have to be a math genius. I'm not a fucking math genius. I'm not a savant. Statistics is just like the approximate likelihood something's going to go from where it is to a different price between now and some future time. So here's what I mean by that. And this is one of the advantages. So when we talk about statistics, let's talk about insurance again. We're going to wrap it all fucking together, right? Car insurance, what do they do? How do they know how much to charge you? Like how do they know how much you should be paying for car insurance? They're going to look at a couple of things. They're going to look at how old are you, right? My son is 16. He just got his driver's license like 2 fucking months ago. So I pay a lot more in car insurance. Why? Because he's young and he's probably going to smack up his car quicker than, let's say, somebody who's 30 or 40, right? One thing. They look at what's your driving record. I don't know. Have you had a bunch of accidents? Do you have a bunch of speeding tickets? If you've had a bunch of speeding tickets, you're going to pay higher rates, right? Because chances are you're going to drive faster. Maybe you're going to smack up your car quicker. So what do they look at? They look at statistics. What does a life insurance company look at? Okay, what's your medical history? Do you have fucking emphysema? And are you on a breathing machine? Well, you know what? You're probably going to fucking die a lot sooner than somebody else is. So you're going to pay a lot more in life insurance premium, right? All of this stuff, medical insurance, everything. I have a place in the Virgin Islands, right? In St. John in the Virgin Islands. Is that hurricane prone? Fuck yeah, it is. It's in the Caribbean, right? So are places in the Caribbean subject to hurricanes? Yes. Is my homeowners higher in the Caribbean than it is, let's say, in Iowa or something like that? Maybe you have to worry about tornadoes or something. I don't know about Iowa, but I'm just saying, you get my point, right? So insurance companies look at statistics. They look at statistical likelihood that you're going to have a crash or your house is going to burn down or get blown away in a hurricane. Options are the same. Let's go back to our Coinbase thing here. A lot of this stuff is so cool. So Coinbase is $2.90 a share, right? We're going to look at a $2.50 put. What is the statistical likelihood Coinbase is going to go from $2.90 to $2.50 between now and next Friday? I'm going to tell you what that number is. You don't have to calculate it. You don't have to be a fucking math genius. The statistical likelihood is 12.35%. The way I got that, see, this word is delta. Don't be confused by big words. It doesn't matter. Delta is the statistical likelihood that the price is going to go from where it is to the strike price between now and the expiration date of April 30th. Where does that number come from? It comes from the brokerage companies. Like people, other smarter people than me calculate that shit, right? And it's not going to be exact, right? But it's going to be an approximation. So when I make trades, I want to do things that are consistent with the risk that I want to take, right? I want to be comfortable with the risk that I want to take. So a 12%, and the reason I get this, forget about the negative. So I'm not going to, I always say, like, crash course, things can be like as easy as you want it to be, or as it can be as complicated as you want it to be. Like when I walk into my house at nighttime and I flip the switch and I turn the lights on, I don't know how the fucking electricity works. I have no idea. But I just know I flip the switch and the light goes on. So I don't worry about details, right? So who cares what the negative is? Forget about that. But see how it says 0.1235. That means that there is a 12.35% likelihood, approximate. Is it black and white? Is it etched in stone? No. There's no free lunch. There's no exact numbers. There's no zero risk. There's always going to be, let me go back to, I'm going to go to life insurance. Okay. I'm uber healthy. I fucking work out every morning. I just lost like 30 pounds like the last year. I'm like the best shape of my life. Right. I don't take any medication. I take some supplements, and I'm 48 years old. So if I have life insurance, I pay less, let's say, than somebody else that's unhealthy, that's taking blood pressure medicine or all this other bullshit, right? I pay probably a lower price, all things being equal, right? Is there still a chance that I could die tomorrow? Fuck yeah, there is. I could walk across the street and I could get hit by a truck. I could die, or I could die from a variety of reasons. My point is, even if this said 0.001, there's always going to be a risk, but you have to just evaluate what that risk is, right? So there's approximately 12% likelihood that Coinbase is going to go from 290 to 250 between now and Friday. If it's 250 or lower, I'm going to buy 100 shares. I'm going to buy them from somebody else that was buying insurance. Now, a lot of times people will ask me, Michelle, how do I find somebody else to buy that, take the other side of that trade? You don't have to go find somebody to take the other side of the trade. The beautiful, like all these numbers on the screen, that's what the market's trading at, right? So like if you buy Apple shares, you're going to buy whatever the market's trading at. Do you have to go find somebody to sell their shares to you? No. You're a buyer, they're a seller. The New York Stock Exchange is an amazing place. They're going to match those two parties up. Options are the same thing. So that's what this last traded at. You don't have to go find somebody. I know I got a lot of questions here, so I'm gonna get to all my questions. Let's see. If it dips below 250, are we still required to pay 250? The answer is yes. So I think you probably asked that before I mentioned that. but here's the thing. So who knows Warren Buffett? Everybody knows Warren Buffett, right? Warren Buffett is a big believer. He's like one of the smartest investors on the planet. He trades options a lot, right? And he said, a lot of people don't realize that. They think he just buys and holds. He does that too, but no, he trades options as well. What does he say? He says, if it's a great company and the shares go down, it's on sale. You buy more. So that said, let me explain something to you. Let's say like Bitcoin is super volatile, right? I think some Bitcoin companies were down like 10% today. I think Bitcoin the other day was down like 25% or 20%, something crazy, right? It's got a lot of volatility. Volatility is good when you sell options. That means you're getting paid a lot of premium. But let's go back to our example. Coinbase is 290 and I sell a 250 put, and let's say it goes down to 200, right? I buy it at 250, but maybe I buy some more at 200 and I'm just going to average down my cost. That fucker is going to go back up. I mean, could Coinbase go out of business? Maybe. Anything could go out of business, right? But again, you have to evaluate whatever you think the risk is appropriate to what you're looking to accomplish. But that's how it works. If Coinbase is over 250 a share, you don't fucking buy it, but you still keep the $170. Who has questions so far? So I got some messages in here. Cool, makes sense. That's awesome. I didn't know that before, that kind of thing. Let me see how many people are even on this call. I did have a whole bunch of people register. Let me know if that, I'm going to move on to another concept. There's two main concepts when you trade options. A lot of times people will like, go on YouTube and there's like, oh my gosh, let me trade a iron condor or a collar or, this or that. Again, things can be as easy as you want it to be, or as it can be as confusing as you want it to be. In my view, there are two main things, right? There is selling a put and selling a covered call. And I just talked about basically about selling a put, right? You sell a put, you take in premium, you keep the premium regardless of what happens. And what you do is you are committing to buy that stock if it drops to a certain price, that price or lower. If it doesn't drop, you don't buy it. But either way, you keep the cash. The other way, and I do have some questions, I'm going to get to those in a moment. The other main thing, it's just two easy things that you have to learn. The other main thing is selling a covered call. Anybody that owns stock should be selling covered calls, in my view. Now, am I right? I don't know. There's a million ways to skin a cat. Maybe there's lots of different ways to accomplish something, but these are my views. These are, I think they make a lot of sense. You tell me, and you're more than welcome to disagree. But let me give you an example. Coinbase just went public a few days ago, right? And let's say I don't have any cryptocurrency and I want to like get in on the action, but I don't want to like crypto is annoying to buy, and take it from me because I've had tons of crypto over the past few years and lots of different coins. And it's annoying. Like I said at the beginning of the call, exchanges and passwords and this and that, lack of regulation, that kind of thing. Let's say I don't have any crypto now, or let's say I do, but I want to get more, right? But I want to be safe and I want to be in this New York Stock Exchange and not necessarily like somewhere else. I could buy Coinbase. So where's Coinbase right now? Let's go back to Coinbase. Now, again, the US market's closed, but like I could, why am I not, why is my mouse seems stuck? You guys, I think you can all hear me, but for some reason my system, here we go. Okay, so Coinbase, I think it was like 290 something per share. This is super slow. Sorry about that. We can hear you. Thank you. Let's see. Okay, Coinbase is 288 per share and change. Okay, so let's just assume that, right, you could buy it when the US market's closed, but let's just make things easy and understandable. Let's say the US market is open and right now it's Friday morning, right? And I'm just gonna, I'm gonna round it off. I'm gonna buy 100 shares of Coinbase at 288, right? I'm just gonna say, what's 288 times 100? 28K. 28.8, almost 30K, right? So I put in 28,800. Now you could also buy on margin. We're not going to get into that. That's like in the weeds, that kind of thing. We're not going to talk about details. I'm gonna buy 100 shares at $288. I'm going to spend $28,800, and I have 100 shares of Coinbase. What can I do after? I can sell a covered call. What is a covered call? I choose whatever price and whatever date I want. I always choose the price and the date, always, right? Let's say I buy the shares at 288 and I say, you know what? I want to buy shares at 288 and I would be totally okay if I was to sell those at like, I don't know, at like 290 or let's say 295. Let's say 295. I'm going to buy 100 shares at 288 and I'm cool if I was to sell them at 295. And I don't know, because I would make like $7 a share, right? $7 a share times 100 shares, $700. That's kind of cool. You can do what's called buy your shares. You can sell a covered call against it. Now, selling a covered call has no risk in the sense that you cannot lose money when you sell a covered call. If you fucking disagree with me, put it in the chat box and we'll have a discussion about that. But I'm telling you, you cannot lose money selling covered call, and I'm going to explain to you why. I own 100 shares at 288. I already paid for them, right? I paid 28.8. Now, if I own shares of stock, I'm going to have volatility if the stock goes up or down, right? I'm going to have exposure, right? Maybe it goes down, I'm going to lose money. I already have that. If I sell a covered call, I already have volatility in case the stock goes down. I take in money because I'm committing, I'm taking in premium, right? Premium, just like car insurance. I'm taking in premium and I'm committing to buy my stock if it's that price or higher. Call up, put down, right? That's kind of the direction that they go. I buy 100 shares at 288. I pay $28,800. I sell a 295 call that expires next Friday. That call closed at $1,290, 12.9, always times 100. That means $1,290, you heard me right, $1,290 gets dropped into my brokerage account. I could spend that anytime I want. I could spend it right now, right? $1,290. If Coinbase is 295 or higher between now and next Friday, I'm going to sell my shares at 295. Well, guess what? I don't care if Coinbase is fucking 295 or higher because I'm still going to make money. When I started trading way back in 1997, my first broker, I was like 23 years old. My first broker told me, Michelle, don't be fucking greedy in the stock market. Pigs get slaughtered. I'm telling you, that's like one of the, there's lots of reasons why people make mistakes. That's one of them. Pigs get slaughtered. Don't ever like, oh my gosh, I shouldn't have sold that because I could have made more. No. When you make money, you should be happy. So how much money can I make, right? So I buy the shares at 288. I sell a 295 call. I take in $1,290. I keep that regardless of what happens with the share price. If Coinbase is 295 or higher, I'm going to sell my shares at 295, right? I paid 288. I sell them for 295. I make $7 a share. 7 times 100 is $700 plus by 1290. What is that? I'm not a fucking math whiz, so I'm just going to do it with a calculator, old school. 1290 plus $700. I'm going to make almost $2,000. 1 week, almost $2,000. 1990, right? Let's talk this through. Pay attention. If Coinbase is not 295 or higher, I'm not going to sell my shares. I'm going to keep my shares. I'm also still going to keep the 1290 because remember, that's premium that I got paid. I never give that back. Once you get paid premium, you keep it. You never give it back. I keep the 1290. I keep my shares. And next fucking Monday, I'm going to do it all over again. Selling a covered call is kind of like this. Now, I live in LA. We don't have fucking farms here, but I'm going to give you an example anyway. It's kind of like if you had a farm, and I also don't really eat red meat, but I'm going to give you an example. If you had a farm where you had cows, right? And you were raising cows because you wanted to slaughter the beef and sell them to the farmer's market, right? That's cool. You're going to make money on slaughtering the beef. If you could also milk those cows and make money from that while the cows are here before you slaughter them, isn't that extra money that you're making? It is, right? That's extra money that you're making. So that's what kind of covered calls are. Now, the only, I would say bad thing, but it's not a bad thing. The only, let's say, thing that you want to be concerned with, right, about a covered call is let's say you buy your shares at 288, you sell a 295 call, right? You take in your $1,290. Let's say Coinbase fucking goes to the moon, and let's say Friday it closes at 400. You paid 288. You sold a 295 call. It goes to 400. Well, guess what? You just capped your upside. You're only going to sell your shares at 295. You're not going to get that upside. That's the downfall, right? So there's always going to be like, is it too good to be true? No, nothing's ever too good to be true. There's always going to be a little risk. That's what the risk is. The only bad thing about selling a covered call, now covered means you already own the stock, right? So that's just what that means. So I own the stock and I'm selling a call against it. Do you need extra money? Do you have to pay a fee to do that? No, you already own the stock. You own the stock. You already paid for the shares. You're taking in free money. You keep that money regardless of what happens. And then you're going to sell your shares if it's that price or higher. Who picks that price? You fucking pick that price. Pick a price that you're okay with selling your shares at. Okay, maybe not 295. Maybe you want to say, okay, you know what? I only want to sell my Coinbase if it goes to 315 or higher. Check it out, right? 315. Go to the left here. My left, by the way. I buy my shares at 288. I sell a 315 call. Where did that close at? 5.55. What does that mean? That means 555 bucks. That's nothing to sneeze at, people. 555 bucks gets dropped into my brokerage account. If Coinbase is 315 or higher, I'm going to sell my shares at 315 next Friday, right? Between now and next Friday. If it's not 315 or higher, I'm going to keep my shares and I'm going to do the same thing over. Rinse and repeat, rinse and repeat. That's what options can do for you. I have a bunch of questions. Let me go through some of these questions. Okay, what's the best program to trade options? I assume you mean like broker dealer or platform brokerage firm. It depends. It depends on where you are. I used to, for many, many years, I used Interactive Brokers, many years. Now I still have them, but I've kind of shifted over to E-Trade a little bit. I like E-Trade. Depends on where you're at. E-Trade, I don't think is in Australia for sure. I don't know if they're in Europe, so it depends on where you are. Personally, if you're in the US, I like E-Trade, but I don't get paid. There's no affiliate program. Like, I'm just telling you who I like. There's lots of different companies. You want to look at what are your fees, right? When you trade options, are you paying like $1? I remember a long time ago when I was managing money for Edward Jones back in 2007. Shit, if I bought stock for a client, the transaction charge, the transaction charge was like $35, right? Now you could buy stock for $1 or 60 cents or something like that. So you want to see what the fees are. You want to see some other things, but I like E-Trade. All right, another question. Shouldn't the insurance premium be lower for a high put price, the opposite? I see the 255 price is at 230, so 230. Let's look at that. So that's going to be super logical, right? So sometimes it's kind of hard, like when at the beginning when you're new, to like wrap your head around up, down, like all these different numbers. It's kind of like one of those things that just takes experience to get the hang of it. But it's going to be logical when I explain it this way. So check it. Coinbase is, and I'm not committed to 1 hour, by the way, because I know we've been going a while. I'm going to finish when everybody's done with their questions and when I'm done talking. So I just want to throw that out there. Coinbase is $2.90 a share, right? If I sell a 250 put, there's an approximate 12% likelihood it's going to go to 250 between now and next Friday, right? And the premium on that is 170, right? If I sold a 255 put, it's closer to where it's trading, right? So it's trading at 290, right? Or 288, whatever, 290. If I sold the 255 is a little bit higher than 250. So my premium is going to be a little bit more because the risk of it going to that price is a little higher. So my premium on that is 230, right? So let's say 275, right? So Coinbase is trading at 290, 288, 290, a 275 put. There's a 33% likelihood it's going to go to 275 because it's closer to where it's trading. So the premium is going to be higher. So it's 600 bucks. So that, I hope that answers your question, David. Let's see. I do have a lot of questions. I'm going to get to all of them. Are calls and puts always done in bundles of 100 shares? That's a really good question. The answer is yes. You could always do multiple contracts. So anytime you trade one contract, it's equal to 100 shares. But let's say I want to buy 200 shares of Coinbase and then I could sell 2 covered calls, or I want to buy 500 shares of Coinbase and I want to sell 5 covered calls. Then all these numbers that I talk about are going to be multiplied by 2 or 3 or 5 or however many you trade. Hope that answers. Let's see. How do you protect the downside if Coinbase drops dramatically while you're playing the covered call? That's a good question. So that's a really good question, Paul. How do you protect the downside if Coinbase drops dramatically while you're playing the covered call? Different people do different things. What I do is I will tend to have a stop on. Okay, let me walk through this. Let's say I buy Coinbase at 288 per share. And let's say I want to say, you know what, Michelle, I want to have my risk finite. I want to have limited risk, right? I want to risk, I don't know, 10 grand. I don't know. I'm just picking a number. What's 10 grand? 10 grand divided by 100 shares. That's if the stock goes down $100. So that means that if I pay 288 per share, if it goes down to 188, I would lose 10,000 bucks. You follow me? So it could be that, let's say you buy 288, right? You put a stop at 188. If it goes below 188, you're automatically going to sell your shares. So you could put a stop a couple different ways, so to say, on the board. So if you don't have to be looking at the screen or anything. You could put like an order in. If the price goes to 188, you're going to sell your shares. So you're saying ahead of time, you know what, Michelle, I'm going to risk $10,000 on this trade. I'm going to put a stop in at 188. At the same time, if you're short a covered call, Paul and the rest of you, if you're short a covered call, you can also put an order in to buy back your call if your stock gets stopped out. I do that on a lot of things. So the way you would do that, and let's talk through that for a moment. And that's the fucking beauty part about options too. I'm gonna go through a couple examples and a couple explanations on how that works. But let's say I buy Coinbase at 288. I put a stop at 188, right? And I sell a 350 call or whatever the number is, doesn't matter. If Coinbase starts to go down, the value of my call is also going to go down. So if I wanted to buy it back and liquidate my position, I'm going to still make money. So in other words, I know that maybe sounds confusing because a lot of you people on the call, you probably, I mean, maybe you do have experience. And there's probably a lot of you that maybe you do, maybe you don't, that kind of thing. But if you don't have any experience, that's probably going to be confusing as fuck to you, right? So let me try to explain it a different way. So it gives you the ability to buy stock, sell a covered call. You could have a stop loss on your stock and only lose a certain amount. And if you lose 10 grand on your stock, you will make money on your short call when you buy that back. So in answer to your question, Paul, I think this is an answer to your question. You can liquidate your short call that you have. So you don't want to be naked a call. So you always want to have a covered call or no call. And the reason is, and I don't want to get too much in the weeds, you don't want to have unlimited risk. So you want to always, it's easy to make money. It's harder not to lose your money. You always want to, like, as much as you can, have finite risk. So you want to say, okay, I'm going to risk 10,000 bucks. But if the price drops and you lose 10,000, you're going to make money if you liquidate your call. Hopefully that makes sense. So Kim, you're in Australia. So Australia, I know for sure you cannot do E-Trade in Australia. You could do, I know you can do interactive brokers, and there's probably other places too that you can do, but not E-Trade. Let's see. I have a bunch of questions. Oh, I love fucking questions. Is there a certain number of days out that you should consider selling puts? Is it different days out for placing a covered call? For example, 4 days maximum from expiration day for selling puts and say 6 days for placing a covered call? That's a good question, Daryl. Different people like different things. I like instant gratification, right? So I am personally a big believer that I don't know where the fucking stock market is going to go today, tomorrow, the next day. I like to lock in gains because, take it from me, I have lost a lot. I have made a lot. I've made a lot of good trades. I've learned a lot and made some mistakes along the way, as we all have. One of the big takeaways for me since 1997 fucking trading until now, thousands and thousands of trades. One of the biggest takeaways for me is that you want to lock in your gains as much as possible. That is why options are so fucking superior to stock. Again, stock, like, you buy Tesla stock at 100 and Tesla goes to 700. You can't spend any of that money until you actually sell your stock, right? What could happen between now and, the stock goes like this, right? Do we invest money? Do we make money? Do we like money? Do we want money because we want to see fucking green numbers on a computer screen, or because we because we want to get a statement in the mail every quarter, open it up and see that number go up? No, we want money. I don't know about you. I want money because I want to go out to fucking Mastro's dinner tonight and the bill's going to be fucking $300 probably for myself or whatever. I want to go to the mall and buy a pair of sneakers. I want to go buy a new car. I want to do this, or I want to plan a trip and fly business to the Virgin Islands. My point is you want money so you can spend it with yourself and the people that you love, right? That's why you want money. And that's why fucking stocks are deficient. I'm not saying don't sell stocks. I'm not. But I am saying if you're selling stocks and you're not fucking selling options, you are fucking missing the boat. I guarantee, I firmly believe that. So going back to your question, Daryl, I like instant gratification. I like 1 week things, right? So I try to do stuff every single week. And I don't like long-term stuff. You can do long-term stuff. So let me give you an example of a long-term stuff. And I know I have tons of questions. I'm going to get to all of them and we're going to just keep going. And I'm going to put this recording somewhere if you miss it, but I hope you stay on because the value of staying on is it's fucking live. And also like, I like when people like one person said, I'm going to make that call because I had something else going on, but I'm going to make it anyway. I like that because it's important, right? Let me give you an example on Coinbase. I'm just going to give you an example. Okay. I'm going to say September. I'm going to give you an example. I have a bunch of, my program is sticky. I don't know if my internet is sticky. Okay. Let's say I have a bunch of money in the bank and it's just sitting there and it's making like 3 cents on whatever because banks pay shit interest. There's no interest, right? I can actually, maybe I want to move that money into a brokerage account. I'm just giving you an example, right? Now, again, it's all your own risk. I'm just giving you different ideas. I'm looking at September put. I'm just going to see where they're trading at. Let's see. May, I don't know why my computer is slow. Maybe because I have a bunch of people on Zoom. June. Okay. Coinbase, I said was $2.90 a share, right? Let's see. September is 148 days. So what is that? 30, 60, 90, 120. It's like 5 months, I think, right? I told you I'm not a math whiz, right? You don't have to be smart in math and be good at this. Let's say I want to buy Coinbase at fucking $50. $50, right? Check it. Let's see it. Okay, let's see. Do I have some Coinbase? And Coinbase just started with options today, actually. Or no, yesterday. Maybe yesterday, or a couple days ago. And now they started with weekly options. They didn't have them yesterday. That's my point. Okay, maybe I can't do. I don't know. It's for some reason I can't go that low. I think because Coinbase is probably not a good example because it's new. So there's going to be stuff coming out. It's brand new. But I'm just saying as an example, Coinbase is $2.90 a share. The lowest I can go for some reason is 160. There's not a market underneath. I can sell a 160 put that goes way out till September. I can get paid. It closed today at $380. $380 goes in my pocket. If Coinbase between now and September, 148 days, 5 months away, is 160 goes down, it's at 290. So it'd have to go down like would it have to go down in half? I don't know. I told you I'm not a math whiz, right? Yeah, it'd have to go like approximately half, right? Drop approximately 50%. But if it dropped down to 160 or lower, I'm going to buy 100 shares at 160. I'm paid $380. There's only a 6% likelihood. Now, this statistical likelihood is going to change. So let's say tomorrow, crypto, I don't know, drops like another 20%. This number might go up, right? So that number is not a static number. It's not etched in stone. It's gonna fluctuate. It's based on statistical likelihoods, right? But as it stands today, there's about a 6% likelihood not Bitcoin, Coinbase is going to go from 280 to 160. But I could sell a 160 put. Who on here, raise your fucking hand, who on here would be interested in buying Coinbase at $160 a share? Who on here? I had a bunch of friends who paid $350 a couple of days ago. So you should be interested, right? This is how you can do it. And guess what? If Coinbase doesn't go to 160 or lower, you don't buy it. But either way, you keep the fucking $380. Can you do that with stock? Fuck no, you cannot. So that's why everybody should be trading options. Let's go through some more questions. Hopefully that answered your question, but let me know if it doesn't. Just wondering if you like using hard days out on setting these up prior to expiration close. I don't know what that means. Just wondering if you like using hard days out on setting these up. I do short term, and today's Thursday, tomorrow's Friday. This call is on Coinbase, but what I do a lot of Fridays, Friday morning, Friday afternoon, I sell Tesla puts all fucking morning, baby. And what I do is like Tesla. I love Tesla. Tesla's super volatile. I love Elon Musk. I like the you know, EV, electronic vehicles in general. And Tesla's got a lot of volatility. So you can. I'm not going to look at Tesla now, but what I'm saying is you could do it same day. So let's say, I'm just going to give you an example. Let's say Tesla's 700. Tomorrow morning, I can sell like a $600 put, and I can take in like $100. It's not a lot of money, but it's $100 for one day. And if Tesla drops like a rock tomorrow, I'm going to buy it $100 cheaper than where it's at when it opens, right? So you're paid money to commit to buy a stock that you like anyway at a price that you choose. Everybody should be fucking trading options. Now I'm gonna answer all these questions, but I'm gonna take a short kind of drive off. Sometimes people buy options, and I want to talk about this because I didn't talk about it at all at this call. There's lots of and you know what? I'm not a fucking savant. You know what? I make a lot of mistakes too. Like I'm not some fucking rock star, right? I do the best I can with the information that I have, and I try to make the most educated decisions. That said, I never fucking buy options. Some people in the Platt community or elsewhere will buy an option, right? So why do they buy an option? Like I gave you an example of Jane Smith bought some Coinbase. She wants to insure her stock in case it crashes. That's one example, right? So you want to hedge, right? So people like, who's that dude that's at finance all the time? He thinks the market's going to crash. I forget his name. He wrote a book. He says every year the market's going to crash. Harry Dent. Harry Dent is all about, let me buy some fucking puts. Okay, you do that, you're going to make yourself broke because you do that for 10 years and the price doesn't go down and you lost all your money. So buying options is a way that you can 10x your money. I'm going to take a detour and give you a little information. You could 10x your money. You can say, okay, you know what? Coinbase is cool, but you know what? I don't want to pay fucking $2.90 a share. I want to buy a call. And let's look at buying a call, right? So let's go back to next Friday because I want to look at short term, right? I think, this is what sometimes option buyers, oh my gosh, I think I know what's going to happen tomorrow because I think I have a fucking crystal ball and I'm so super smart. They think that, but no, they fucking don't, right? But they think they do. So instead of buying 100 shares and having volatility, they want to buy a call. And you could buy a call. Let's say Coinbase is $2.90 a share right now. You could buy like a $292.50 call, and it's $1,300. So this person can I was eating granola before, and I have some stuff stuck in my teeth. Sorry about that. So let's say Coinbase is $2.90 a share. Let's say you buy a $292.50 call. They pay $1,300, $1,380 to be precise, right? And if Coinbase shoots up, their $1,380 can become $13,000. But guess what? The likelihood of that happening is fucking very small, right? So it's kind of like buying a lotto ticket. Can I go to the corner market and buy a $1 lotto ticket and hit a fucking $8 million jackpot? Yeah, I could. But what's the statistical likelihood that's going to happen? It's very, very small. You can do that, and maybe you make a lot of money. Maybe you get lucky. Maybe lots of things. But you have to be correct on the direction, and you have to be correct on the time. I want to take the other side of the trade. I want to take the insurance company. I grew up in Connecticut. It's like the insurance capital of the fucking country, right? Do they have these big skyscrapers because they're not making money? No, they fucking make money. They use actuaries and they take in a little more money than they always pay out. That's how they make money. It's like slow and steady wins the race, right? I would rather and as long as you keep your risk in check, that's the key, right? We're not talking about a lot of stuff on this call because I'm not going in the weeds, but as long as you keep your risk in check, what's wrong with making 500, making 500, making 500? Okay, worst comes to worst, I'm going to buy some stock if it drops. I want to buy that stock anyway. Everybody should be selling options. So sometimes people buy options, they can 10x their money, but the likelihood of that happening is very small. I'm going with the other side of the trade. Okay, let me go through some more questions. I knew if you mistype, it's all good. Daryl, I'm looking at your note. I know that you were mistyping, so I get that, but I still don't understand your question. Wondering if using hard days out and setting these up prior to expiration date, but I think I might have answered it. Let me know if I didn't. I look at 1 week stuff because I want to lock in my gains. I want to lock in my gains because I don't want to be subjected to future market volatility. I want to get hard income. So here's the thing. Once the risk is over, like let me go to that example, right? let's say Coinbase is 288 a share and I'm gonna sell a 250 put. I'm gonna take in 170 bucks. Next Friday comes and Coinbase is 255. I don't buy the shares and the fucking risk is over. The following Monday, let's say Coinbase opens up significantly lower. It doesn't matter because I'm out of it. I already locked in my price. So I like weekly stuff because I want to lock in my gains. I don't know what's going to happen tomorrow and I want to lock in all my gains as I go. Hopefully that answers your question. Let's see. How do they put the how do they put the caramel in the caramel milk bar? No idea. I know you're only kidding. I'm glad that you think it's amazing and you're welcome. Oh, a couple people say I rock. Thank you. Thank you. Yes, I will share the recording. Can you buy options with BTC? Paul, fucking bomb. Yes, you can. Not on the New York Stock Exchange, you can't, but you can buy options and sell options, puts and calls through Ledger X. You can, I think Ledger X, you have to be in the US. I don't know where you're at. I don't think you can be in a different country, but you could do it through Ledger X, right? Just like it sounds, LED. And I'm not an affiliate of any of these motherfucking programs, so I'm just giving you my information. Ledger, LED, GERX. And the cool thing about Ledger X, they're based out of New York. You have to be careful who you're trading with, you know, because there's not a lot of regulation for that stuff. But Ledger X is based out of New York. Last I knew, I'm not saying cheat on your taxes, but last I knew that they don't even send 1099s. So one of the downfalls, let's say if you have let's say you have Bitcoin with Coinbase, old school, not Coinbase stock, but Bitcoin with old school Coinbase exchange, they send you a 1099 if you made money. I'm not here to say cheat on your fucking taxes, but I am here, like, I thought part of the whole attractiveness of Bitcoin is like moving away from that sort of philosophy of, you know, traditional, you know, banks and that kind of thing. Ledger X, last I knew, that they don't even send you a 1099. You take whatever information you want with that. Harry Dent is the one that I was wondering about. Okay, I think, oh my gosh, I thought I had more questions, but maybe I don't. Let's see. Is everybody still on or did anybody drop off? Oh, somebody asked a question in the Q&A section. So you could do that too, not just the chat box. Is there an art to picking the price for the option? Meaning, is it possible or common for your option to not get picked up by someone? That's a really good question, Sean. Let me answer that. I'm going to answer that live. It tells me to answer live or type an answer. I'm going to answer it talking to you guys. So is there an art to picking the price for the option? I think there's an art to everything. There's kind of like, you know, experience kind of, you know, helps you understand things. Statistically, typically speaking, if you have a 5 delta, like a 5 delta, the lower the delta, the lower the statistical likelihood that a stock is going to go from where it is to where it's to what your strike price is between now and the expiration date. So let's say, for example, a 5 delta would be, okay, it's 5% likely that Coinbase is going to go from 290 to 250 between now and next Friday, as an example. Let's say it's a 50 delta. Okay, it's a 50% likelihood that, you know, Coinbase is going to go from where it is now, 290 to the strike price. You're going to get paid more money for that because it's closer to where it's trading, right? If you trade 5 delta stuff, statistically, my experience is that you'll end up buying the stock, like, let's say 2% of the time, right? 2%. What does that mean? That means if I'm only selling five delta puts all the time, and I'm doing it one, like 98% of the time, I'm never going to buy that stock. It's never going to drop down that low because 5% of the time is a low statistical likelihood, right? But also you want to kind of evaluate other things, like different stocks will have different like implied volatility. So like some stocks will have more swing than other stocks. So stocks that have more swing will have more of a likelihood to go down to that price, as an example. But if you're starting out, I always, you know, I teach a class to like brand new people. I just wrapped up, and don't take it the wrong way. This is not a sales pitch fucking at all. And it's like $100 is nothing. It's like this 5-day like crash course. And I tell new people that are just starting, I always recommend, again, recommend is kind of a harsh word, but I always suggest start with 5 delta because it's a very low likelihood of coming down to that price. Hopefully that answers your question. Let's see, what other questions? I think we have like I don't think anybody's dropped off yet. What do you guys think? I know that was like, oh my gosh, I feel like I was talking a mile an hour or whatever you say that. Um, oh my, David, what a good question. GameStop, and AMC. Okay, so David says GameStop and AMC are very volatile right now. Are these good stocks for some puts? Okay, so I'm going to answer that question in a couple different ways. Number one, GameStop. It's funny. How do I even answer this, and how do I say it like politically correct? There's so much fucking crookedness and shadiness like that happens in the stock market in general in a variety of different ways. One of them has been with GameStop, right? So I personally, like when the whole GameStop drama started, I shorted it. And I shorted it with Interactive Brokers. One of the reasons why I've kind of shifted, I've been with them many years, now I've shifted to E-Trade. I feel like they fucked me over one too many times. Because when all that drama started with GameStop, I shorted it. I put in 100 shares to short at the market, right? Now, if you sell something at the market, you're supposed to be filled right there. You get filled wherever the market is trading. But I didn't see my fill for like, I don't even know. I didn't see my fill like for 5 hours or something. It was such bullshit. I'm calling Interactive Brokers on the phone. Nobody answers. They had like 70,000 calls in queue. I don't even know what the number is. And then I wasn't even sure if I was in it. I want to know if I'm in it because I want to buy it back after it drops, right? I was supposed to make like $8,000 on this trade. I ended up like losing 3,000 and I got fucked basically. But you know what? We all make our own. We make whatever choices and it all comes to. I don't want to say it like I got fucked like that. But basically, my point is, I was a little bitter on GameStop for a while. But that said, I do trade GameStop and AMC a lot right now. And why do I do that? The volatility is super high. So what do I mean by that? The higher the number one, the higher the volatility, the higher the swing is, right? That means also the higher your premium is. You're paid more for the risk that you're taking. And here's the thing: like if you sell a GameStop, in my opinion, and again, take what I say for whatever it's fucking worth, right? I'm not here to give you recommendations. It's your money. You fucking make your own decisions. Gone are the days when I manage money for people. I'm not doing that. I'm wrapping that up and I'm getting out of that industry. And I want to just teach other people how to do it, right? So I'm just giving you my information. GameStop is a shit company in my view, right? They're fucking garbage. But you can make a lot of money with them at the short time because they're like hyped and everybody's trading them. So you can sell a put. Let's look at GameStop real quick, right? GME, okay? GME, where are they at? So GameStop right now is 151 a share. They were down almost 5%, 4.6% today. You can say, let's see, let's say 75. I don't know if it goes that low, but let's just take a look. Okay, GameStop, I can, GameStop is $150, right? I could sell a $100 put that expires next Friday. Now it would have to go down in half, right? So is that in half? No. See, I told you my math is not that good. So it's 150. It would have to go down $50, which is what, like 35%, something like that. It'd have to go down a lot between now and next Friday. It closed today at $66. So there's a 3.9, let's say a 4% likelihood that GameStop is going to go from 151 to 100 between now and Friday. I'm paid $66. I think that's a cool deal, and I would take that probably trade all day. And here's why: I make $66. If GameStop is 100 or higher, right? If it doesn't go down, I don't buy any shares. I keep the 66 regardless. I don't buy any shares. But guess what? Worst comes to worst, if it goes down to 100 and I do buy 100 shares, because there's so much volatility, I can sell a call on Monday and make my fucking money back and then some. So you want to try to trade on both sides of the market. When you trade options, when you sell options, let me specify that. When you sell options, you can legit make money whether the stock is going up, whether it's going down, or whether it's going sideways. I'm not a fucking fortune teller. I don't have a crystal ball. I have no idea what the market's going to do tomorrow. I wasn't prepared for fucking COVID bullshit when March and the bottom dropped out. Like what you want to do is you want to structure yourself that you make money any which way, right? So in the answer to your question, I think they're good. Do some other people? I did a video recently, and I have a YouTube channel where I have a bunch of free videos. Let me share that with you guys. You probably have it anyway. It's let me find it so you can snap it or something. Take a snap of it. It's the Smart Foundation for Financial Literacy is the full name. It's this nonprofit that I started not long ago, and I just want to give out free information. My system is super slow. I'm trying to like show you the screen. Let's see. Let's go, Michelle. Maybe because I have like a million windows open, and maybe I'm on Wi-Fi and I'm not hardwired. So maybe there's lots of things. Okay. Let's see. Click your channel. Okay, this is it. So anyway, there's if you see value in it, subscribe to it, because I have a bunch of videos, and my intention is I just want to teach other people how to do certain things. So that's the channel. It's the Smart Foundation. If you want to find it. Let me go back to my screen here. There's my screen. Let me go back to my questions. So in answer to your question, David, I think they're good stocks to sell puts, because I just want to bring in premium. I want to be an insurance company that just takes in premium, kind of like an insurance company that insures a whole bunch of people that don't have car accidents. And you're just taking in premium and you're never buying stock. Or if you do buy stock, then you sell a covered call against it like right afterward. That's what I want to do. In your put example, you collect the $1.70 at 250, but what if it drops dramatically? You can't sell while your puts are out there, can you? Okay, let me go back to, I think you were looking at Coinbase, right? With that question, let me go back to COIN, Coinbase. So I think what you're asking about, oh, and somebody said you lost the audio. You can hear me now, right? Oh, and then you said, never mind, dumb question. Okay, so I'm going to scrap your question, Paul. You asked a question, then you said, never mind. Okay, let's scrap that. I think you said lost the audio, but I assume it's back. Awesome. Love it. A couple cool comments. I appreciate that. Thank you for the love. What other questions? I know that was like, oh my gosh, it's 2:47. I know we're going to do an hour, and it's like a little bit over an hour. I know that was like super fast, and it was like ultra crash course. But does that make sense? Who can see themselves, raise your hand, who can see themselves doing something like this? Let's say selling a put on a stock that you wouldn't mind buying anyway at a lower price than where it's trading and taking in income. Lots of hands go up in the air. Can anybody not see themselves doing this? Is there any downfall? Anybody, like, what am I missing? Anybody say, oh my gosh, Michelle, you're fucking full of shit, options suck, and I never would do this. Anybody feel that way on here? I think as long as you take care of your risk and your maximum exposure, it's easy to make money. It's harder not to lose your money. That's always my motto. Warren Buffett says, don't lose money. Don't lose money. And here, let me, that brings me to another point. I'm going to give you an example. Okay. I'm giving you guys all my fucking nuggets, because I just want to help people. You know, your success does not minimize my success. You know, lots of reasons why I'm not like managing money, or I'm in the process of like winding that down. But one of them is like, it's very unfulfilling, and it's super fulfilling when I show people and open up your eyes and, holy cow, Michelle, I never thought about that, you know, that way. And I didn't realize I could do that. Oh, I didn't know I could do that. Like, that is super fulfilling for me. And let me tell you guys something. When I started, like, okay, let me give you guys a quick story, right? For those of you who want to stay on the call, this is a good story. I started managing money professionally for clients in 2007, right? For those of you who follow the fucking stock market, that was like the height of the market. October 2007 was the fucking height of the market. What happened after that? The market went down 50%. It was like the implosion of the credit crisis, right? When I was doing that, I was recommending Bank of America. I worked for Edward Jones at the time, broker dealer. And they were like, oh, sell Bank of America stock to all your clients. It's such an amazing stock, and it's $50 a share. It was like $52 and change at its height, right? It was paying a 5% dividend. It was fucking amazing, blah, 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 right? What happened to that stock after did anybody on this call own Bank of America back in 2007 before the market crashed? Who owned Bank of America? If you didn't, it's okay. I'm going to tell you where the stock went. The stock went from $50 a share to $2.50 per share. That means you would have lost like 90% of your value. Now, if you lose, yeah, $1. I don't think it went down to $1. I think it was like 252, which is low. Maybe it was $1 and I missed something. It was super fucking low. We'll put it like that, right? If you go down 90%, right? If your value goes down 90%, what happens if you go up 90 the next year? If you go down 90 this year and you go up 90 next year, do you get back to where you started? Let me know in the chat box. Raise your hand if you think that that's accurate. give me some answers. I have a couple answers, but I'm not going to say any until I get a few more. If you go down 90 and you go up 90, do you get back to where you started? Yes or no? Come on, come on. 4. What does 4 mean? Oh, I had some yeses. I was waiting for some yeses and nos. Fucking bomb. Okay. If I go down 90 and I go up 90, the answer is a big fucking fat no. I do not go back to where I started. I'm going to give you basic math because it's just easier using simple math. If I go down 50% and I go up 50%, I do not get back to where I started. If I go down 50%, I have to go up 100% to get back to where I started, right? That's the problem with fucking buy and hold. That is the big, so when I was working for Edward Jones, let me tell you something. Oh, build a portfolio for investors. Like if figure out, are they balanced toward growth? I'm sure that this is going to hit a fucking spot in some of you guys' head. Balance toward growth and income. Oh, I'm only 40. I have another 30 years to go to retirement. I can withstand the gyrations of the market. Time in the market, not timing in the market. Have any of you guys heard that before? Like you're okay. You could take more risk, blah, blah, blah. Fuck no. I say it's a big fat no, right? I look at it like Warren Buffett says, rule number 1, don't lose money. Rule number 2, follow rule number 1, don't lose money. And the reason for that, take it from me, or fucking look it up on YouTube if you don't believe me. Take it, but believe me, take it from me. If you lose 50, you have to go up 100 to get back to even. How likely is it to go up to 100? For people that own Bank of America, lost 90% of their motherfucking value, right? In 2007. If you go down 90, you have to make, I don't know what the number is. I should know that because I do presentations like this a lot. And usually I don't even prepare for them. I just speak. I'm kind of like, I want to say I'm like Tony Robbins, but he's my mentor. I love Tony, but I just get up and I just talk about stuff that's already in my head, right? Because I just have a lot of experience in it. You go down 90, you have to make like, I don't know, 300% to go back to even. I mean, or it's probably a bigger number. What's the likelihood of that happening? It's very, very small. So if that's said, if there's a way that you can limit your loss and only go down certain small pieces, but still make gains along the way, would you be interested? Yes. Then options, you should be fucking trading options. You should be selling options. So that is like my big fucking funny story. Like Bank of America. Oh yeah, let me buy Bank of America. Let me sell Bank of America to all my clients. And that was like one of my biggest holdings in 2007. Fuck. So don't tell me I have gone through many cycles where I've lost a considerable amount of money. That was one of them, right? Okay, let me go through some of these questions that I have. Let's see. It makes sense. I had no idea before, but I have a better understanding now. And this might be like a fire hose, right? Because this is like super fast, like, not even an hour and a half. And it's like stuff that you're not familiar with. If you give it some time, you can learn this. You don't have to be good in math. You don't have to be good in school. You don't have to be super smart. Anybody has the ability to learn how to trade options. I firmly believe that. More to learn, but it was a wicked crash course. Thank you. Let's see. That makes perfect sense. I thought you weren't good at math. Math was always like one of my favorite subjects in school, but no, I'm not a math whiz. I use a calculator a lot. I use a calculator. I use like numbers on Mac or Excel or something like that. You have to go up 200. If you go down 100, well, you can't go down 100. I don't know what your answer is. If you go down 90, you have to go up 200%, I think. Is that your answer? That's a big number if that's your answer. So that's my point though. Like you don't want to lose money. So you want to, if you buy stock and you sell a covered call, I like to put a stop in. And if you get stopped out, you can always rebuy it, after it goes down. So limit your risk, limit your loss. Sell puts on stuff that you would want to buy anyway. So like, don't be buying like selling puts on, let's say, GameStop. If you think it's a shit stock and you might get stuck with it, maybe it's not a great idea. I like it because of the volatility. You get paid a lot. But generally speaking, you want to sell puts on stocks that you feel really good about, right? That you'd be okay with owning at that particular price. If you already own stock, sell covered calls against it, man. Bring in some fucking income. If you own stock and you're not selling covered calls, it's just like if you own some fucking cattle on a farm and you were waiting to raise it to sell the beef to the people, the farm, whatever. the farmer's market, the grocery store, but you weren't milking the cows and making extra money. The only downfall is you might give up some upside, but you get guaranteed return, is what I'm saying. If you could get guaranteed return, there's nothing ever wrong with that. Like if you could own stock and just sell calls, like even far out of the money, so it's unlikely that you're going to sell your shares at that price, it's extra money. It's going to boost your return. A couple of people said, thank you. You're quite welcome. I appreciate the kind words. I'm going to go ahead. Let me know if you have, it's 2:54 Pacific time. I didn't even take a damn shower yet today. It's funny, like all this time, like I got up at 6 and I've been working all day and I've done a couple of Zoom calls. This is not my first. But yeah, it's funny. I do have to take a shower, but let me know in the chat box if you guys have other questions. Let me see if there's any other questions in here. Is this helpful? Does this help you guys? Somebody else said, hey, drop off by 3. So that's awesome. If this is helpful, let me know. Like hit me up on, I don't know, send me an email or something, or message me or WhatsApp or whatever. And let me know if you want to know more. I do classes like these, like lots of different classes. I'm trying to do like lots of different videos on different things. And I just want to help people. Daryl, looking forward to my next class. Yes, I will get you those dates. I didn't forget, balancing like fucking 10 things at one time, as we all are, I guess. But yeah, so I want to say, first of all, thank you for your attention. Thank you for your questions. Thank you for your interest. Let's see, this was very informative. I'll subscribe to your YouTube channel. Thank you. I want to grow my YouTube subscribers. Not that you make money. I mean, I'd have to like get like 1 million subscribers, but I do want to go that direction. I appreciate the kind words. If you have questions after this course, hit me up. Or if you want to know more, hit me up. And I'm going to figure out where to put this. So all of you probably, I think I only put this on Facebook. So I'm going to figure out where to put, you know what? I think I'm going to put this video on my YouTube channel. So that's where this video is going to be if you want to see the recording. And maybe I'm going to do some more similar to this as time goes on. So hopefully that was helpful. Coinbase, a different way of investing, taking in money, right? Taking in income, not having to invest with exchanges, buying old school BTC. Not that that's bad, but this is just an alternative. And I hope that helped. Take care and happy trading to you all. Bye-bye.